Okay, so today we're going to be learning accumulation, manipulation, and distribution and how it actually works. Let's hop onto the charts, and before I give you this trade I took using it, let's just kind of move away. Let me explain something. So we all know that market makers are the ones that move the markets, but how do they move it? So kind of think of this as real life trading, right? So back in the day, we used to trade by I give you a goat for your sheep, for example, right? Now, that similar ideology is used in today's trading. I give you I sell something to you for you to buy it, or you sell me something for me to buy it, and this could be like shares of gold spot, Euro USD, etc., like actual stock market shares. So that's how it works. We have a supply and a demand for it. So if there's no supply for the demand, then the market won't move. So if there's nobody selling you the what's called the items, then you can't even buy it, right? If there's no supply, there's going to be no demand. So that's why market makers sweep liquidities. They try to stop out a lot of They basically try to like hunt stop losses, because stop losses automatically close your trade, and once they hunt it, they hunt the retail trader stop losses. Boom! Now they have more market power, because no matter how much capital you have, if nobody's selling you anything, then you can't buy it, and if nobody's buying, then you can't sell. So that's kind of the way accumulation, manipulation, and distribution works. So this is a trade I took today. Let me explain to you my thought process basically. So accumulation, manipulation, distribution is basically, actually let me draw it out first. So what happens is there's three zones. The accumulation zone, where it's just relative highs. Maybe there's like a little deviation, but it's pretty relative at the end of the day. It's consecutive. I guess you could say there's a support and a resistance. And then boom, out of nowhere, it breaks out. You know what I'm saying? And then it distributes. So, oh wait, how do I undo this? Okay, whatever. So in this case, this over here would be the accumulation zone before it broke out. So let's try to illustrate the whole word. This is the manipulation zone. Manipulation, and then boom. This is the distribution. Now, this could be vice versa. It could be accumulating, blah blah blah. Okay, this is really bad drawing, and then it manipulates, and then boom, it distributes. So that's literally all it is, and this happens every single day. I'm not sure what times. Sometimes it gets accumulated like the session before New York. So in London session, sometimes it gets accumulated like right before New York Open. In this case, that's how it was. It got accumulated before New York Open. So here, let's just go through the trade. So boom, this is accumulation. It accumulated relative highs, relative lows. Boom, do you see how it's relative? This is a real example. And if we back test, you might see this every single time before New York Open. It usually accumulates, and then boom. You see how it distributed? Manipulated. So right here, people are buying and selling relatively at the same rate. Over here, some people are trying to go for premature shorts, right? Some people are trying to sell right here, maybe around there. Maybe they see a confluence as their strategy. They try to sell, and then boom, markets go up to take out those sell orders, because we don't want to sell yet. So in this case, this is the trade I would have taken. So, or I took. So boom, it took out liquidity, right? It took out liquidity, and then it went down, and it inversed this fair value gap. So there was a fair value gap on the bullish side right here. I deleted it, but it inversed it. You see? Boom, it just inversed it. Usually I like to see it on the 15 minutes, but today the 15 minutes did not form any FEGs, so I just stayed on to 5 minutes for entries. The higher the time frame, the better it is. So that's why I usually wait for 15 minutes. So boom, it inverts the fair value gap. We don't trade yet, okay? Because it could possibly go up. One move up, it went down, and I'll wait for the break of structure, right? So boom, broke structure, and as it broke structure, it inversed another fair value gap right here, right? It basically like literally just inversed it. That's telling me, okay, we're looking for sells. There's a strong sell um, order bias or whatever. So people are going longs. I would have went long too off of this order right here. I would have went long off of this because it keeps like bouncing off. Maybe I would have waited till break of structure, but that's another trade. I didn't even take it. I didn't even analyze it yet. So here, on 5 minutes, it formed an FVG. Wait, correct. I think I actually moved this down. Formed an FVG right here. So we're looking for sells. It hit it off. It inversed that fair value gap. It inversed this fair value gap. And it broke structure on the 15 minutes as well. So I waited for the 15-minute break of structure. I sold right off the candle close. Speaking from hindsight, I sold this at 8:25. I should have waited till 9 a.m. I would have had a way better entry. Like 8:50. But this is because I have the foreknowledge. It reversed back in. I should have waited, but maybe like we'll take this into account. So boom. So now it goes through and it moves up and it retraces back into the fair value gap. This happens sometimes. It's fine, you can't panic. Retrace back into the fair value gap. Move back down, inversed another bullish fair value gap. So that tells us that the bears are overpowering them, overpowering the bulls in this short-term trade. Oh, wait. Okay, I think my camera is back. So the bears are overpowering them, create another FVG, and it is within an equilibrium. So boom, it's within the equilibrium. It's in the what's called premium side. So it touched into it and then blasted down, right? My TP was here. First TP was over here, right? Off this low hanging fruit. My second TP, if you take the fib retracement tool, bring it down to here, the lows. So basically if you bring it from the low to where it accumulated to the high, I took profit at -1. So that would have been another TP. And then technically I was waiting for move down to maybe 1.5, 2. So those would have been my other TPs. So over here, boom, and it went to break even. That was the trade. That's how it should have went. Except while I wasn't looking, it went up and I over leveraged here because I was pretty certain about the trade, and I got automatically stopped out because I was in drawdown. I was in daily drawdown. I got automatically stopped out. Next time I will get the funded. So yeah, if you guys want, for the next funded challenge, I'll record me every day trading or make a really long video talking about it. So yeah, that's accumulation, manipulation, distribution. And you see this almost every session. If I'm not too lazy, let's try to find another. Here, another example's right here. Boom. Right away. The accumulator right here. Right, it's relatively the same area. And then bang, it manipulated upwards. It took out liquidity, right? It hit liquidity. If we go on to the 1 hour, most likely, okay, where is it? Oh, never mind. But I thought this would have been a 1 hour high, but it's not. But 15 minutes, probably, yeah, 15 minutes, boom. Hit that, and I guess on the 5 minutes, it also touched into fair value gap. And see, I learned this recently, and I'm taking it an account to my regular strategy. I usually wait for liquidity sweeps, uh, FEG inverses, and then trades. So boom, another confirmation hit into the 5 minute fair value gap. This would have been the trade I would have taken, except I don't think I trade at this time. And then boom, inverse the fair value gap right here, and I would have traded off this candle inverse, or if I wanted to be a little more conservative, I would have waited for this break of structure. I would have placed a short position right here, placed the stop loss at the candle high of the FEG, and then taken my fib retracement, brought this down to here, targeted a -1, 1.5, and then 2. See, boom, it just distributed. Such a sexy trade. That's what I would have taken in this case. If you guys watched to the end, I appreciate that. I hope you guys learned something. Leave a comment on another video you guys want to see. Also, join my free Discord. We literally talk about trades every day. We help each other out. Psychology, whatever, whatnot. We crack jokes every now and then. It's completely free. I don't think I'll make this paid for. If I ever do make a paid, it's probably gonna, like, everything that's free is gonna remain free, but I might just have like live calls that are paid for. But everything else is free. I even sometimes every now and then drop a signal. It's not really a signal. I just like go over my biases. See, I called this trade. AMD might form for free at 7:49. So at 7:49, like somewhere around that there, I called the AMD might form, right? Yeah, with all that aside, I hope you guys enjoyed this video. And see you guys in the next one. Well, 12 minutes exact.